The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. We had a bit of an interesting market trade seen on Monday. Soy complex bolstered by some fresh sales and a hot, dry weather forecast, it appears. That gave us a little bit of a bullish story, while corn ended up finished right around the unchanged mark, and we saw wheat under some pressure on the day. We were down in livestock. We have a lot to kind of digest here now that the trade has moved past the August WASDE report and is looking ahead here to the back half of August. Joining us now, John Heinberg with Total Farm Marketing is with us here today on Market Talk. John, always good to catch up with you, my friend, and hope you had a good weekend. And looking like Wisconsin, southern central Wisconsin, getting some decent rains on Monday. I'm sure some happy farmers with that rainfall on Monday. Wisconsin was kind of that last hole to get filled in, John.
Yeah, we've been actually needing a little bit here. We've picked up a couple timely ones, but so far today it's been a solid, it's kind of a good soaker, nothing heavy, just good rain all day today, and be something to hopefully kind of finish this crop out or get those last little bushels maybe added on. We'll have to see, but yeah, it's been kind of frustrating talking to some of the Wisconsin guys and keep watching it go around us. And at least today, like I said, we're getting good coverage for at least the center to the southern part of the state today.
Well, and thinking about that good coverage, it might come in handy here because it sounds like this forecast is going to turn hot and dry here for the back half of August for many folks in the Corn Belt. And that seemed to be a big driver in the soybean market on Monday, along with those export sales I mentioned. To me, those two factors coming together seemed like it was a bullish enough story to give us a little bit of a premium on Monday, John.
Yeah, we saw a little bit of buying strength on that bean markets here. Obviously a couple things like that weather coming into play. Again, beans are made in August. We've had some good moisture. Now things are filling fairly nicely depending what region you're in. And now we're going to throw a little heat at it. I mean, they're talking pushing 90s in our area of the world and higher temperatures south of us. We'll have to see how that kind of plays out. So maybe we threw a little bit of caution to the wind in terms of the weather side today. That probably helped the corn market off the lows, I think, also today too. Just fact that we didn't break it and then we got a little bit of a bid there. So we'll have to see. Maybe the market's trying to decide if this is going to be whether to finish out the crop or, in that regard, or to add more to it. Now, there's some regions they've picked up plenty of moisture and a little heat wouldn't hurt anything. They kind of maybe dry things out a little here too. So we'll kind of have to see if the length of it, the duration, what happens after it. There's some chatter, 10 days out now that maybe some Gulf moisture can move in and that could just turn things back to the wetter side again. So any strength here might be just a little bit more of a short-term blip that probably needs to be met with some selling mentality, especially in the corn market, given the fundamentals that the USDA put out there this week.
And, thinking about those fundamentals, obviously the demand picture, we've talked about it. That's a big issue underneath all of these grain markets here. I know corn, in the case of corn, we're getting back to offers to where we're close to, or if not the cheapest in the world compared to the Brazil numbers. At least I've been seeing some of those Gulf offers out there, and in the case of corn, December corn held 481, which is a long-term support level underneath that market here. So felt like in that respect an okay day in corn. But to your point, how much do we have to realistically feed the bull here? That's the big question, John.
Very much so. We're pretty oversold, especially after the report. We did hold the 481 low from the 13th of July, so that brought a little bit of money flow in, throw the forecast in. But you're right. Still the biggest thing is what's going to happen on the demand side. Now you got a U.S. dollar index kind of breaking out here again, 5-week highs on the dollar index. It's actually strengthening against the Chinese yuan, which is not going to help the demand side from the Chinese as well. We'll have to kind of watch how this plays out. The Russian ruble was the other currency kind of tumbling today. That spills over in the wheat market because last thing we need is cheaper Russian wheat. in that regard with more global buying power. So I think that may have been one of the bigger factors in the day today was what was happening in those outside markets, the currencies affecting corn and wheat. Soybeans, that 245 number is relatively tight. And, until we know where we are with the supply, that's going to keep some support in this market. And then, like we mentioned, saw some good demand, nice sized purchase. Now, we don't know when that happened, Thursday or Friday last week, reported the day by, unknown destinations. So we're seeing those U.S. beans move. The problem with the U.S. corn side, again, we may be a little bit more competitive, but we're just still not seeing the business here at this time window. And then you got to look at what it goes to in terms of other countries. Where's Japan's margins regarding the corn prices for U.S. versus Brazil? About the only one that really seems to be stepping up right now is Mexico and picking up that corn. So, nice to see that Mexican sale last week, but we need to just see other players step to the marketplace, and they're not here right now.
No, they are not here right now. And I think that's a great point to make to keep in perspective. And you throw in there a bigger crop in South America. Argentina cut their peso as well on Monday. I mean, just there's a lot of competition out there. And, I've even heard the chatter about various ports on the PNW are shut down right now. They're not running because we're not moving product through there. And so you put all that into perspective, John, feels like this is an important time to really be fresh and current on your risk management strategy in grains as you have a better handle of what you have in the field and staring at a lot of uncertainty and a lot of bearishness in the grain markets, John.
2.2 or 2 billion bushels of corn, as we got on Friday's report, is still a heavy load. Obviously, the yield can still come down, but the demand can come down as well. That's still reflective of a price and a trend that does point lower. Now, this 480 area seems to be pretty sticky right now. A lot of stops probably building here. If we break it, I would be kind of concerned that we see a big pop to the downside. So a little cautious on that side of it. Again, I think we do have probably a lower price coming in front of us, barring some true news to kind of change the picture, whether it's a tighter supply or an increase of demand that we need to see. There's just a lot of moving parts right now, too. And obviously, too, the weather in the Midwest, what's going to happen with the Mississippi River? Is things going to be hauling in that time frame? If, we got river issues like we saw last year, what's that going to do to the basis, especially if that's around the harvest time frame? There's a lot of things out there. So on the risk management side, one thing I've been talking with a lot of guys about today, if you have those essential bushels, those bushels that do not have storage for, you may want to stay a little more aggressive on the cash marketing side here. I know it's not a great window, but at least you got some value here because right now the path still points lower. The trend still points lower. I would rather make sure you got that floor secured on those bushels and use call strategies or some other type of strategy to keep your upside open available to you, than just sit here and hope the market can find a way to be there for you at the harvest time frame.
Definitely a lot of things to kind of take into account. The other issues, you mentioned China earlier a little bit, obviously some concerns about their economy and the collapse of their markets, a lot of debt tied to property. So you think about that. And then, you throw in there too, we still got the Black Sea issues, even though we had the Russia news with the firing on that civilian ship over the weekend, didn't really drive the wheat market, but you throw that in there, you throw in energies, crude oil, etc. There's just a lot of things swirling around these markets that from a big picture perspective, one news item can change things higher or lower in a flash in today's world, John.
Very much so, and all those things are outside liars that we don't know what's going to happen and where they're going to kick in at. It's someone to me to make sure the producer stays focused on one thing: what's happening with your cash market, what's going on with your basis. That's a trend to tell you how your supplies are, how the grain movement is, and then where is still the big picture here? 2 billion bushels of carryover. Is that going to get tighter? Is that going to get bigger? How much tighter? How much bigger? Right now it's still heavy. Until we see something really kind of change, that's where the option strategies come into play. You make those sales, you secure your floor, you use the call options, keep that upside into this market, especially when prices are depressed. That's when you own those calls, just because you just want to be missing out if the rally does come. But at the same time, you got to be smart about what you're picking. We don't want to put so much premium on top because they are not cheap, that we take a questionable sale already and make it even poorer. So it's a balancing act right now for producers, and just kind of watch where things are. But right now, still the trends are not very friendly. and just make sure you're protecting yourself here, because typically a 2 billion bushel type crop with the stocks use in the range that we're in is probably more of a lower $4 price target than sitting here around 480.
We're having a conversation today with John Heinberg from Total Farm Marketing. John, let's continue our market talk conversation and look at livestock. And starting with cattle, it was a lower day in the cattle trade on Monday. Feeders found some triple-digit losses there. Fats were down moderately. The cattle market, to me, we've talked about this quite a few times. It just feels like it's gotten tired, waiting for something to give us a leg higher, but it's not happening. What's your thoughts on this cattle trade right now, John?
Yeah, it felt a little bit just like some pullback today. Now, one thing came out Friday, USDA did forecast a higher production for beef in the United States for next year.
Yeah.
But you got to put it in a relative picture. They raised it up, but it's still down significantly from the prior year. So that's somewhere where I think we're seeing a little bit of money flow. Even though you're still looking at markets at a negative day, maybe testing the bottom of the range, we're still in a bit of an uptrend again. And we've been trading that way for about a month now. Now the bottom of the range is here. We got to make sure we hold this. Big move in retail values today. A couple bucks higher at midday for choice. A couple bucks higher for select. So maybe we're going to get that Labor Day demand. Cash trade last week was a little bit firmer in most regions, just not a real heavy aggressive trade. So those are things we're kind of watching here. Again, watch the technical side. But again, it still feels like all of a sudden we get a little move in retails and cash comes with it. The cattle still are tight. We haven't had a delivery yet against the August contract in this delivery period. That just tells me the cattle aren't out there, that this side could move a little bit higher, but I'm watching the technical barrier. Even on the feeders today, dollars plus lower, triple digits lower. But again, still an uptrend, still supported here. But again, little cautious if things were to break here technically, that we could see some money flow out.
Now, I know in the case of the Hogs, August off the board after Monday's session, stayed pretty close with that cash index, but then you look at the deferreds, October set to be lean month, 79.15 at the close. That cash index still 102, 103. That is a huge discount to the cash index there with that October contract. So what gives here, John? Do we push the futures higher, or what's going on in your opinion?
Well, right now the fundamentals are still trying to pull this hog market maybe a little higher, $7 higher at midday carcasses. It just tells me there's a little bit of buying. Some days of those are anomalies and just some things causing that midday price to close this afternoon will probably be a key. Biggest thing is that CME index is rolled over here now, so we're kind of watching the cash index starting to work lower. The technical side of the October contract does not look good. Actually, with this break here today, pushing that 79 handle, looks like we got a better chance of going down to 75 than we do going back to 80, just the way the charts are acting. So maybe there's just more hogs coming in the pipeline. The market might be starting to count that in, especially if the cash market starts falling apart. I know we got a big discount, but there's still a lot of time between now and October 1st, for that cash market to continue to slide. So I'm cautious here, especially given the technical picture and just how this market wants to handle. You talked about the Chinese side of the equation. I still think that's always a big factor in the hog market. Concerns regarding that in terms of their purchasing power, their economic situation does not support that hog market here as well.
John, dairy trade, any notes there as we kick off a new week? What are you seeing when it comes to milk, butter prices, cheese, et cetera?
Again, that milk market, we're looking like a market that's kind of rolling over, but now consolidating. So this is either going to be one of those topping signals or we got a bull flag. So watching that retail demand, still watching those cheese prices. They've kind of calmed down here. We're getting into past that buying window. So it's a bit of a spot. I still think there's some good value for producers here to make sure you're taking advantage of that value. But at the same time, I don't like that big toppy signal there from the middle end of July. Just kind of saying that, hey, maybe we're done with the upside and this chart market has a chance to roll over, especially if we continue to see good production and those cheese prices start coming back down.
John, overall, before we wrap it up today, final thoughts you want to share, or anything you want to reiterate to folks here as we navigate through a little more uncertainty in the markets here middle of the month?
Those macro markets, the outside markets are going to be a big factor in this thing here, and just what's happening, watching crude oil, trying to push to maybe the $90 handle. We'll see a little bit toppy in today's trade. Where are we at? Supplies are tight. Demand looks pretty good right now. Does that kind of give us some boost? what's going on with that dollar index. That could be just an overlying factor that if we find a way to break out of this range again, the inflation numbers were a little mixed last week. So there's just some moving pieces out there. Just make sure you stay focused on what's going on in your market. There's still good value, at least in the livestock side. There's more potential for downside in the grain side. Just don't fall asleep at the wheel here and, expect things to run higher just because you think they are.
John, great thoughts as always. If folks want to reach out to you, get some advice there at Total Farm Marketing, what is the best way to reach you?
Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com.
John, always a pleasure. Thanks for the time. Have a great rest of your week, and we'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.